Hi forex traders, you're welcome. This is the second video in this module of the institutional trading concept, and I want you to pay attention to what we're about to learn. Again, if you have learned or have an idea on this very topic, just take it as a recap of what you've already learned in the past. Okay, this is introduction to candlesticks. Like we all know, or most of us do know, that candlesticks is one of the methods of interpreting price delivery as issued institutionally. There are three patterns of price representation, okay, on the trading platforms that are available, either the MT4, MT5, TradingView, CTrader, WebTrader, or any other trading platform that you may have access to. You are either interpreting price action using the candlestick charts or the bar charts or the line charts, okay? But candlesticks are most popularly used, okay, because of the uniqueness of the price delivery that we get from these candlesticks. It is mostly accepted across the world, okay? Now, candlesticks were invented by Steve Nielsen, a scientist, a Japanese scientist who invented candlesticks and named it as Japanese candlestick. That's what it's called, the Japanese candlestick. Okay, now there are two types of candlesticks. It's either a bullish candlestick, that is a candle that tells us what the institutions are doing. When the institutions are buying, how we know they are buying is by looking at those bullish candlesticks, and how we know that the institutions are selling is simply by looking at these candlesticks, the bearish candlestick, the sell candlesticks. It's important for you to learn how to position yourself with the institutions, because the earlier you are able to do that, the sooner you are going to come into that level of consistency in profitability with this market. Okay, the institutions are the big guys. They are the ones who determine where price is going per time, because price delivery is not random. Price delivery is algorithmic, and every time you see the candles moving from one point to the other, there is something institutionally driving price to that direction. When I say price, I mean driving the candles to that direction. There's something institutional. There's something underlying from the institution that is injecting or inducing price movement from one point to the other. Okay, so like I was saying, we either have a bullish or a bearish candlestick. An ideal candlestick should have the following characteristics. Number one, an opening price. Number two, it should have a high. It should have a candle body. It should have a low. It should have a closing price. It should have what is called the wicks or the shadows. These are the anatomy of a candlestick, either a bullish or a bearish candle. It should have these characters contained within it as it forms. Okay? Now, the candle body is a true price delivery, and so we will pay more attention to the candle bodies than the wicks. Why? Because the wicks are mostly induced by broker pricing or interest rates. The brokers induce that price movement you see on the wicks. That's the interest on the broker side. Okay, so we don't want to be manipulated by the broker. We want to pay attention to the body, to the candle bodies, much more than the wick. I am not saying we should ignore the candle wicks, but I'm saying that when we see price delivery, we are more interested in looking at what the bodies are saying, much more than what the wicks are saying. Okay, so quickly, let me show you what that means, the anatomy of the candle. Remember, I said a candlestick should have these characteristics. Number one, the opening price and a closing price. This is the major difference between a bullish and a bearish candlestick. Why? Because in a bullish candlestick means that a candle that tells us that the institutions are buying, meaning that the opening is usually lower than the closing price. Why? Because logically, you don't want to buy something that is expensive. You want to buy something when the price is very low or cheap. So the opening is usually low, and it is repricing to form the low of the week, of the month, of the day, or of the hourly time frames. Candlesticks form relative to the time frame that you are looking at. Okay, you already know, or there, let me just say, there are different time frames for doing analysis or technical analysis using candlesticks. Okay, starting from the 1 minute, 2 minutes, 3 minutes, up to the 1 month time frame. Some price data will even give you 2 months, 3 months, 1 year candlesticks, depending on what assets you have or to the range of data that you are looking at. But whatever the time frame is, the logic is that each candle forms relative to the time frame. So if you are on a monthly time frame, it is expected that every month one candle forms. If you are on a weekly time frame, it is expected that every week one candle forms. If you are on a daily candle, it is expected that every day a candle forms. Okay, how this candle forms is that in a bullish candle, or when we are going to have a bullish day or a bullish month or a bullish week, the candle opens low and then reprices to form the low of that month or low of the week or low of the day, trades up to form the high of that month, high of the week or high of the day, depending on the time frame, then comes back to close below. By looking at just this, you already know that this is the opening price, this is the closing price, this is the candle body. In between the opening and the closing is the candle body. Then this is the candle wick that usually forms the high and the low of the entire candle. Okay, so this is the wick or shadow, the high, the low, the open and the close. This is a bullish candle stick. A bearish candlestick has its opening higher than the close, so it opens higher, forms the high of the day, high of the month, or high of the 4-hour time frame, trades down to form the low of that candle, trades up to close. So the candle bodies between the opening and the close. What do you notice? The difference is that bullish candle has its opening below, bearish candle has its opening higher. These are the things that distinguishes a bullish and a bearish candlestick. There are different types of candlestick patterns that I don't want to go into them because truly they are not relevant for our learning, especially the concepts that we are looking at, institutional concepts. We have nothing to do with whatever chart pattern or whatever candlestick pattern. We are more interested in knowing price delivery as a whole, not just chart patterns or candlestick patterns. Okay, so this is all I wanted to know regarding candlesticks. The open, close, high, low, body of the candle, the size of the body of the candle, that's all. So let's technically look at it from this time frame, which is the daily time frame. This literally tells me that every single day each candle forms in the direction of the trend. Okay, so let's analyze just a candle or two candles. The blue candle here is a bullish candle. Why? I chose to color it blue because that's the color I prefer. You can color it whatever color you want. The black candle in this case is a bearish candle. Now if you observe the opening on this candle here, the opening from the body, not the wick, is 108 by my right, 109 sorry, 0.63, and the close is 1110. So technically, you know, this is a bullish candle. Why? The opening price is lower than the closing price. Now if you take a look at these prices on top of on top of this chart, you can see there is O here, there is H here, there is L here, there is C here. What it means is that opening price, high of that candle, low of the candle, and close. So let's look at the candle we are examining, this very candle. So take a look at those numbers there. If I press it there, you can see that the number there is telling us the opening is the opening here is 109. What's the close? 1110. So it's a bullish candle. What's the high of that very candle? The high of the candle is 1110.64. What's the low? The low is 109.45. And this is the body of this candle. This is a bullish candle. And then this is a bearish candle. Okay, let's look at the opening, close, high and low. When you just put your cursor on it, you would see it up there. The opening is, because the opening is higher, remember, because it's a bearish candle, and the close is lower, the opening is higher, and in this case it is 1110.299. the close is 107.933, the high is 1110.992, and the low is 107.714. This is a bearish candlestick. So guys, if you look at the charts, you are going to see that they are spread across everywhere. It's a bullish and a bearish candlestick. That's the same thing that happens on every single time frame that you know. Go to the monthly time frame, you'll see them everywhere. Every single month, a bullish and a bearish candle keeps forming. Series of bullish candles, a bearish candle, series of bullish, bearish, just by the color. Okay, if you don't know how to use TradingView, I'd like you to go to my YouTube channel, Carrie's Forex Trading Institute. Then you search how to use TradingView so that you can learn how to navigate TradingView effectively. Okay guys, I want you to do that. Go to the 1 minute time frame, you will see that it's the same principle that works with these candlesticks. You can see every candle has an opening below, because the bullish candle closes above. This is the candle body, the low, the high. This is a bearish candle. They are everywhere, spread across every single time frame. Okay guys, so this is all I want you to know regarding candlesticks. Until next time, I wish you good luck, good trading.